Over the past 12 hours, the international landscape has been defined by severe geopolitical volatility, sending shockwaves through global markets and supply chains. U.S. President Donald Trump announced in a national address that Washington's military objectives in Iran under Operation Epic Fury are nearing completion. However, the situation on the ground remains kinetic. A double strike from Iran and Hezbollah targeted central and northern Israel, while the UN Security Council issued a strong condemnation after Israeli attacks impacted peacekeepers in Lebanon. This contrast between diplomatic messaging and ongoing strikes suggests a clean ceasefire is not yet in sight. The targeting of civilian water networks in Bnei Brak marks a deliberate move toward a more prolonged phase of conflict. This chart shows the immediate market reaction. Crude oil has firmly breached the $100 per barrel threshold. In response, the IEA, the IMF, and the World Bank have established an emergency joint coordination group to manage the fallout. These institutions describe the current crisis as triggering one of the largest supply shortages in global energy market history. If oil remains in the triple digits, energy importing nations will face significant economic strain. This surge in production costs is likely to trigger a second wave of core inflation, complicating recovery efforts through the end of the decade. Equity futures responded with an overnight plunge. The Euro Stoxx 50 dropped 2%, while the US Stoxx 600 fell by 1.7%. Investors have aggressively moved capital into the US dollar as a safe haven asset. This surge has pressured dollar-denominated commodities, causing gold to drop over 4% to approximately $4,580 per ounce. In a significant shift in market sentiment, traders have now fully priced out any U.S. Federal Reserve interest rate cuts for 2026. With 2026 rate cuts erased from the outlook, global borrowing costs are set to remain high. This cycle will put continued pressure on corporate balance sheets and slow the flow of venture capital across the tech sector. The logistical impact is already visible in Asia. South Korea has officially raised its national energy security alert to the second highest level, citing real-time physical disruptions in oil supplies. As shown on this map, the bottleneck at the Strait of Hormuz is breaking down the supply chains for critical materials, including helium, phosphate, and aluminum. The aviation sector is particularly exposed. Ryanair's CEO has warned that if refinery delays continue, Europe could face severe jet fuel shortages by early May. Simultaneously, cybersecurity monitors report a 245% surge in malicious web traffic. State-sponsored groups are now utilizing artificial intelligence to automate phishing and infrastructure reconnaissance. With a quick diplomatic exit unlikely, both sovereign nations and private corporations must now prioritize hardening digital perimeters and securing physical supply reserves to manage this period of volatility.